So a lot of technology companies file the R&D tax credit without really knowing what the IRS actually expects. I have built audit-ready studies for over 100 companies, and I know exactly what the IRS is looking for. So this video covers the new Form 6765 requirements, how to connect every single dollar to the work that is being done, and how to build an audit-ready defensible documentation package without disrupting your engineering team. And by the end, you'll understand how to make your claim defensible. So as you might have heard, the IRS is making changes to the Form 6765, which is the form that you utilize to claim your R&D tax credit. We have known that the new Form 6765 was coming down the pipeline for a while now. And this is really the direction the IRS has been going in for quite some time. We know this is the way the IRS is going because we've seen it in audits, and we know these are the types of questions the examiners ask for anyways. Now what is happening is they are essentially moving this function onto the form itself. What would happen before is that if an R&D tax credit study was audited, the examiners would typically send out their initial IDR, which is an information data request. They would ask the taxpayer for some information. Essentially, what would be in this information data request would be all of the details related to the credit claim. They wanted to know what were the activities, what were the different charges included, and basically what was the buildup of the credit that was claimed. Now what's happening is that they're essentially taking this and putting it directly on the form itself. Now, this new section, Section G, isn't going to be mandatory until tax year 2026. So there's a little bit of time to get ready. As the time of recording, we're still in March of 2026, so there's good runway for a lot of folks to really put a good process in place before the 2026 tax return is due. So really, what does the IRS want to see? Well, they want more details. So historically, if you look at the Form 6765, there are just the broad categories of expenses that ultimately make up the credit. Now with Section G, you will have to break out the different projects as well as the different business components related to those expenses. So what does this mean? This means that the IRS is wanting detailed information nexus to the expenses, the projects, and ultimately the activities related to those projects as well. Now, there are a couple of key areas I want to talk about for the Form 6765 and Section G specifically. So on the new Section G, the IRS is asking to provide projects that make up 80% of the qualified research expenditures. So they want to see the majority of the expenses and what makes them up on the form. The second is going to be 50 projects. Now, what this is that they want you to include up to 50 projects and their descriptions on the form as well. So these are really the two main components that you need to be thinking about when you're putting your documentation package together to ultimately fill out Form Section G on the new 6765. So ultimately, these two areas, the 80% as well as the up to 50 projects, are going to be the crucial areas that your team needs to start documenting right away in order to fill out this section going forward. Now, diving a little bit deeper into what type of specific information the IRS is requiring. Well, they really want to see the description of the business components and what were the technical challenges, the permitted purpose, the why you were doing it, and ultimately the experimentation as well. And then in addition to that, they want to see the different categories of expenses broken out too as well. One crucial area of focus is supervision and support expenditures. Now, this has been a large area of contention for a very long time. What the IRS doesn't like to see is large payroll earners making up a bulk of the qualified expenditures. So if you have executives with a high compensation package, they are going to push back and say, well, are these executives really doing qualified work? Aren't they at a too high level to be qualified in R&D? Now, you need to be ready for these changes. If you say you have a developer that just happens to be the CEO, you're going to need to provide evidence that that person does do direct R&D work. So those are the specific areas and areas of focus for the IRS I wanted to point out. Make sure you're putting a package together right now because this is going to be mandatory within the next year. We have helped SaaS companies restructure their entire credit claim in order to meet these new requirements. If you are concerned your R&D credit support package would hold up, grab your R&D credit snapshot in the link below. I will review your situation personally and show you where the gaps are. Or if you want to go straight to a full conversation, that option is also below as well. Now, let's keep moving on. So let's walk through a specific example of what this might look like. So historically, what was done? A lot of times engineering teams might give broad classifications for the qualifying work that was done. So say at the end of the year, they might say, well, 70%, 80% of the work is really qualified. Well, this approach is still a high-level estimate, and that is okay. Really, what the government is moving towards is they want more specific identification of the business components and the qualifying activities that tie to them specifically. Ultimately, they want to see the work being tied to specific project and activities. So a simple example we can walk through here is, say, we recently worked with a company that wanted to include their entire contractor spend. So what that means is that they said that all of their contractors were working on research and development activities, and therefore all of it qualified. Now, we dug a little bit deeper and we asked a few questions. We wanted to know if there was a bifurcation of contractors that worked on specific components that were qualified versus contractors that worked on the more maintenance activity. And once we dug a little bit deeper, we found out that there was a group of developers focused on that new project development, while they had another subset of developers that were really in maintenance mode and there to keep the lights on of the core platform. So now this is a great example of what the government calls nexus. Now, nexus just means a bridge. They want to see a connection. So using high-level estimates like all of contractor work qualifies because it's R&D, that's not going to cut it anymore. Really, you're going to need to dig a little bit deeper to understand which components are tied to which qualified projects, while other components or other qualifying work may not be tied to specific components as well. So you may be asking, this is extremely cumbersome and there's no way that you can go down to the individual level and document every single thing that everyone is doing. Would you need to implement time tracking or maybe a timesheet? The government understands that that isn't feasible for everybody to implement. What they're wanting is a more targeted analysis to understand how the credit came to be. If you're filing credit, they must have come from certain expenditures. And if those expenditures came from somewhere, what specific categories did those expenses come from? And if those expenses came from somewhere, what specific projects and activities were they derived from? That's what they're looking for. Those are the things that they're really trying to see. And as long as you have that documentation ready, that's going to be extremely helpful. Now, how are you going to get this documentation ready? Well, for most companies, they already have this documentation set up in different systems. So say, for example, you may have a JIRA or Confluence or GitHub repository where the developers are already adding in all of their information. When they have this information in here, a simple thing to do is just tag it to a specific project. Once you have those projects all consolidated, that's a simple way to understand which projects which developers were working on, and then you can even tie to the specific activities that they were working on as well. This is just one example of a simple way that you can add in a simple process that is already part of your development lifecycle that can just add additional evidence for this new Section G and ultimately the documentation the government is requiring. Finally, I just want to go over a few best practices on how to build contemporaneous documentation and why the government is pushing this area so much. So, as you can imagine, tax happens every single year and it's usually an afterthought. So this also is the same for the R&D tax credit. Oftentimes, studies are put together way after the fact of the work being done. If you think about it, there is the whole year that the development is done, and oftentimes the taxes don't get filed until 3 or maybe 6 months later after the year is already over. That's an 18-month gap. Now, if you try to go back and ask developers what they worked on throughout the year, oftentimes they're not going to remember, or they're going to take some guesses. Now, this is no fault of their own. I don't remember what I ate last week for lunch. And again, this is really what the government wants to get away from. They want to get away from the more high-level estimates and they want to gear more towards contemporaneous documentation. Contemporaneous documentation just means evidence is created at the fact of development. So that way at the end of the year or maybe into the next year, whenever you're filling out the R&D tax credit forms, the engineers, the founders, the teams aren't guessing about what was actually done. They can pull up the records that were already filled out during that time, and they can fill them out with confidence and know that that evidence and the credit being claimed automatically ties back to each one of those categories we spoke about. What were the qualifying activities? What were the qualified projects? And ultimately, what were the categories that made up the R&D tax credit? That's the correct way to do it, and those are the best practices, and that's what the IRS is looking for going forward. So a final tip here that I highly recommend is just doing quarterly stand-ups with your finance, CPA, and engineering team. They don't need to be too long. Just take maybe 30 minutes to quickly go through and review the development work that was done during that quarter. Having these things and gathering the documentation during these periodical interviews helps extremely with the ultimate credit claim that's going to be filed in the next year. That way there's no second guessing, and there is an audit defensive credit study already created at the end of the year so that you can file the credit with ease, with knowing that you've done your due diligence. So the IRS has raised the documentation standards for the R&D tax credit, and most companies are not ready to do this on their own. So the rules have changed rapidly, and staying current is a full-time specialization. Filing without proper documentation opens you up to adjustments or maybe a full disallowance. And the standards are only getting tighter every single year. With the right specialist, documentation gets built correctly from the start. We build audit-ready R&D studies for tech companies, handling everything through qualification, all the way through documentation, and ultimately filing with your CPA. I've worked with over 100 companies through this process. If you want to know whether your R&D credit claim would hold up to these standards, I highly recommend clicking the description below for your own personalized R&D credit snapshot. I will review your situation on video, and I will tell you where your strengths and your gaps are. And if you already know you want a specialist handling this, you can book a call directly from the same link below. Thanks for watching, and see you in the next one.